The Finance Minister, Mrs. Nirmala Sitharaman, will be presenting the budget, this year's budget, budget 2022 on 1st of February 2022. So many bodies across India, they had submitted their recommendations, and even our ICAI, to whom I belong, my alma mater, also had suggested some measures and changes in the limits, keeping in mind the overall economic scenario. And let me briefly summarize the same, which looks to me very quite reasonable and practical. Actually, I had written an article on the same topic, and which has been published in all business portals, and it is available in the public domain. Anyway, I will also share with you. The first recommendation by ICAI was about the raising of the standard deduction from 50K to 100K, that is from 50,000 to 100,000. Why? What is the logic behind that? Salaried employees are currently allowed standard deduction under section 16 at rupees 50,000, or the amount of salary whichever is less. Okay, this is known fact. This is to cover any expense incurred during the course of the employment other than professional tax on employment. There are various expenses that the employees incur during the course of employment which they cannot claim in a deduction. At the same time, the few exemptions that are available to them under section 10 are subject to upper limits, which have been fixed several years back. I'm going to that one also, and virtually serve no purpose on account of 1, inflation, 2, employees during the course of their employment incur various expenses, including upgrading the skills for rendering their services as employees. The deduction for such expenses needs to be enhanced every year. For avoiding the possible leakage of revenue, such deduction may be linked to the cost inflation index, just like as it happens for income under the head capital gains, and maximum amount may be restricted, say up to rupees 1 lakh. This was the logic which was put by our institute ICAI to raise the limit of standard deduction from 50,000 to 1 lakh rupees. Then there are some other important changes or suggestions given by ICAI. But before going to that, let me go to the history of that. Remember, during the budget, 2014 budget, the then finance minister, late Sri Arun Jaitley, had enhanced the limit of section 80C contributions from 1 lakh to 1,50,000, corresponding to the financial year 2014-2015, with the relevant assessment year 2015-2016. Now, the time has come to relook at the earlier ceilings or the limits to be raised, and our institute has come up with the following proposals, which are in tune with the current trend and needs of the salaried class, which I feel is quite reasonable and adequate. 1, the important suggestion given by our ICAI was with respect to PPF, Public Provident Fund. PPF is used as a means of savings by entrepreneurs and professionals, right? Do you agree? Those who are self-employed, for them it is a sort of savings. While the SSC in employment has the compulsion of saving 12% of their salary with matching contribution from employers, the only safe and tax saving option available for self-employed SSCs is PPF. That all you all know that. Hence, the suggestion to increase the ceiling of PPF contribution to rupees 3 lakhs. This may also boost the domestic savings as a percentage of GDP and will have an anti-inflationary impact. Present day, the PPF ceiling is just 1,50,000. So the institute has suggested raise it double, make it 300,000. Then this again reiterates what I have already told you. The annual limit for contribution to PPF is increased to rupees 3 lakhs from the present ceiling of 1.5 lakhs. Next, there are other proposals also, but these are the key proposals given by our institute. The quantum of deduction under section 80C to be increased from rupees 1,50,000 to 2,50,000 to provide savings opportunity to the public at large. You all know that presently you have a ceiling of 1,50,000 rupees only under section 80C. So another good suggestion given by our institute was to increase from 1,50,000 to 2,50,000. Now, these are the proposals which have been given by ICAI. But keeping the suggestions given by ICAI, and also I am a chartered accountant, so I should know my figures well, I should know the figures well before I speak. So just I went to the budget of last year, 2021, and I have some very interesting figures. This is the actual figures, estimates, budget estimate, revised budget estimates, and finally you have the following figures. I will not take much time. I will try to be very brief. Let me give you the figures, actual figures. Total revenue expenditure of the union government, 29,29,000 rupees. Okay. Capital expenditure, 5,54,236 crores. Out of that, there is a breakup. Capital outlay, it is of 513,862,000, 5,13,862 crores, and loans is 40,374 crores. Total expenditure, including revenue and capital expenditure, is 34,83,236 crores. Okay, I hope I am very clear. You have expenditure, you also should have revenue, right? Let us see the revenue part. What is the revenue part? You have revenue receipts of 17,88,424 crores, revenue receipts. Then let us come to the part B of receipts, that is a capital receipts. How much is the capital receipts? Recoveries of loan is almost 13,000 crores, that is anticipated or budgeted, and other receipts is almost 1,75,000 crores. Out of that, the major part is supposed to come from the disinvestment process, which is currently going on, and they want to raise a maximum amount from LIC disinvestment, which should come anywhere between now and 31st of March. That's a big receipt for the government. So disinvestment, they're anxiously waiting for that. So total 13,000 plus 1,75,000. If you add, you get 1,88,000. So what are the total receipts now? Revenue receipts plus capital receipts. It comes to 19,76,424 crores. I repeat, 19,76,424 crores. Out of that, there are three important figures which has to be noted. One is a revenue deficit, another is fiscal deficit, and third is primary deficit. These are very key important figures. Let me not express it as a percentage of GDP. Let me give you the hard figures. Revenue deficit, it is almost 11,40,576 crores. I repeat, 11,40,576 crores. Fiscal deficit, 15,06,812 crores. 15,06,812 crores. And the primary deficit, 66,97,111 crores. 6,97,111 crores. So looking at the primary deficit, that is not a healthy number, primary deficit in a positive, and that also a big number means, according to me, it is not a good number. That means it shows that borrowings are too much and the servicing cost also is too much of the primary deficit figure, which you see, that is 6,97,111 crores. So keeping all this in mind, let me give my opinion whether the standard deduction will be raised from 50,000 to 100,000. Before that, I have one important figure of collections. The collection figures which has been released by CBDT, that is the Central Board of Direct Taxes, they say that the net direct tax collection till 16th of December was 9,45,276 crores. Out of that, the main part is corporate tax, which stands at 5,15,870 crores, and the personal income tax, including security transaction tax, personal income tax, including security transaction tax, which we pay when we buy or sell shares or whatever it is, that small amount. That's including that, it stands at 4,29,406 crores. Net of refund. The figures of direct tax collections for the financial year 2021-22 as on 16th December 2021 show that the net collections are at 9,45,276 crores compared to the previous